Thank you for everybody who joined our Twitter space tonight. We are now live on YouTube, and Dr. Chris Cole will be teaching tonight again. We are going over trading basics, trading fundamentals, and this is one of the utilities that you guys will get. Thank you for everybody who joined our Twitter space tonight. This will be one of the utilities that you guys get for joining and being a part of the 722 NFT project. So we're super excited to have you guys here with another teacher by Dr. Chris Cole. I will get with you guys at the end of the lesson. Bro, it's your time. Let's get it.
All right, peace. Thank everybody for attending and showing up to this live class. This is by far probably the most important video to date. I suggest that you go over this and watch this over and over and over again. This particular class is about liquidity, okay? Liquidity. This is going to teach you how to become the hunter and not the hunted, okay? This is going to teach you how the market operates in its one of three states, either hunting liquidity to the upside, hunting liquidity to the downside, or consolidating in the market. Okay. So I'm going to demystify this subject on liquidity, break it down very simple as usual, and teach you all how to become snipers in the market. Okay. All right, liquidity. Master the market. If you can master liquidity, you can master the market. This is a skill that's going to require you to put in the screen time, to be consistent, to journal, and more importantly, just continue to pay attention to how the market is reacting toward these liquidity levels that we identify on a daily basis. Okay. Liquidity lets us identify where the small retail traders have entered the market and where we can easily identify where their stop losses or their money to be taken is present in the market. Okay. Remember, the market is always in one of three states: hunting liquidity to the upside, hunting liquidity to the downside, or consolidating. The market is rigged in a way to trick and manipulate the traders to trade in the opposite direction of the true move of the institutions, the banks, and the big money. Okay. So the market gives retail traders an opportunity to do what? Be tricked and to be manipulated. Okay. The market creates these opportunities only for the market to turn around and do what? Take the money of the 95% that consistently loses money in the market. Okay. To put it quite simple. Okay. If we want to find liquidity, write this down in your journal, your notebook. If I want to find liquidity, I want to find where the retail traders or the small or the 95% are currently making money. Okay. If I can locate where the 95%, where the smaller retail traders are making money, I now can define my targets. Okay. I now can identify where I can start to hunt. Okay. Where the market will start to hunt. Okay. So the name of the game, again, I want to be able to identify where the small account, the retail traders are currently winning in the market. Where to find liquidity in true market direction. Remember, our daily time frame. Oh, let me go back. Where to find liquidity in true market direction. Remember, our daily time frame is the first time frame we want to look at to determine intraday trade direction. We're day traders, so we want to look at our daily time frame. If you can find liquidity and master it on the daily time frame, it becomes easy to identify true market direction. Now, how do we do that? The major things that we look at tonight are our dojis, double tops, double bottoms, and our large wicks in the market. Let's look at an example and break down a chart, okay? Again, the name of the game is what? We want to be able to identify where the small money or the retail traders are currently winning. Now, we're looking at the gold chart, okay? We're looking at the gold chart here, okay? I want to start off with what? Looking at my daily time frame, okay? So on your WSX platform, D1 is going to give me my daily time frame, okay? Now, from here, I want to identify where the retail traders are currently making money. Write this down in your notebook. How can I identify where the retail traders are currently making money? I identify dojis that has started a move. I identify double tops that have started a move. I have identified double bottoms that start a move. And I look for large wicks that have been left behind in the market, okay? Now, let's break down a daily chart here. All right, so daily chart, each one of these bars represents 1 day in time, okay? Each one of these bars represents 1 day in time, okay? Now, most recently, I have a doji right here, okay? I have a doji right here. I have a doji that started a move here. And I have a large wick that has started a move right here. I got a doji right here. I got a doji right here. And we can call this a double top right here. Okay. So just like this, just like that, these are my areas of liquidity that have yet to be grabbed. Okay. These are areas that the smaller traders or the retail trader is currently winning. Okay. What do I mean by that? They have not been taken out of the market yet. Okay. So the retail traders that traded from this double top right here, the market has not come back and done what? Take them out. We had a doji form right here. The retail traders that got in from this doji, they have not been taken out. Market moves down. We form another doji on a daily time frame. Guess what? The retail traders that sold from this doji have not been taken out. Market moves down. We form a large wick. Okay. Now, guess what? The retail traders that bought from this large wick, they have not been taken out. Market moves up, forms a doji. Guess what? The retail traders that bought from this doji have not been taken out. Market moves up. The retail traders that sold from this doji have not been taken out. We go down and form another doji. Okay. And guess what? The retail traders that bought from this doji have yet to be taken out. Okay. Have yet to be taken out. So let's go here. Let's go through here and mark them so we can go through each one of these time frames. Mark liquidity there. Mark liquidity there. I got liquidity there. I got liquidity there. Liquidity there. Got liquidity there. And I got liquidity here. Okay. Now let's clean this up a little bit. All right, so now I got my liquidity levels for my daily time frame, right? Marked up in this aqua looking color, okay? And where am I currently trading? I'm currently trading right here at 17.99, okay? I'm currently trading right here at 17.99, okay? I got 3 liquidity levels left behind to the downside. And I got 4 liquidity levels on the daily basis, on my daily time frame up above me. Okay. So guess what? My bias is what? I know the market ultimately wants to move back higher. Okay. The market ultimately wants to move back higher, but eventually, what? We got to come back and trade lower to take the liquidity below. Okay. We got to come back and trade lower to take what? Our downside or sell side liquidity. Okay. Now trading at 17.99 or 1800 roughly. My liquidity up top, just looking at my daily time frame, I'm closer to my liquidity above the market compared to what? My liquidity below the market. Okay. So before I look for sales in the market, I'll look for liquidity to be grabbed here. Okay. Before the market eventually does what? Make a move to grab liquidity below the market. Okay. And then probably eventually a move back higher. Okay. But we'll see. Now that I marked out my liquidity on my daily time frame, okay, I now want to move to my what? My 4 hour. Okay. I want to move to my 4 hour and I want to do the exact same thing. Okay. Where is my liquidity on my 4 hour time frame? We already got it marked up on the 4 hour. I mean, on the daily, I got liquidity right here. I got my long wick on my 4 hour right here. I got my double bottom that's already marked up from my daily time frame. Up above me, I have a large wick, which also coincides with what? My daily time frame. Okay. So now I'm going to mark up my liquidity on my 4 hour time frame. That hasn't been marked where? That hasn't been marked on my daily. Okay. And we're going to change the colors of those edits so I know that what? They're on a different time frame. So, so was that? Let's make it red, whatever. Clean it up. All right, so now I got my liquidity mark on my 4-hour time frame. The aqua color is my daily liquidity. Okay. The red is my 4-hour liquidity. Okay. Aqua is my daily liquidity, and the red is my 4-hour liquidity. What takes precedence? My larger time frame absolutely takes precedence. Okay. My larger time frame absolutely takes precedence. Okay. Now, where do we go from here? Let's go mark out our liquidity on our 1-hour time frame. Okay. On our 1-hour time frame. One-hour time frame. 222. One-hour time frame. We can mark this long wick here. Okay. And we have a what? We got a double, roughly a double bottom, almost a triple bottom. Okay. But again, this coincides with our what? Our larger time frame. Okay. So I'm only going to mark this long wick on this 1-hour time frame. Okay. I'm not going to mark this doji right here because what? This candle has already taken this liquidity. And what do I mean by taking this liquidity? The market has already moved above this liquidity level, okay, and taken it, okay? It's already moved above this liquidity level and taken it. So on my 1-hour time frame, I only have this long wick to target, okay? I only had this long wick to target here, and I have lots of lower sell side liquidity from my major time levels, as we can see from the aqua, okay? As we can see from the aqua. So let me go in here and mark this. And I'll change that one to yellow. Okay, so I got my aqua for my daily time frame. I have my red for my 4-hour time frame, and I have my 1-hour liquidity levels marked in yellow. Okay. So now this gives me an idea of what direction that the market is going to go in first. Okay. If I zoom out, okay, I got downside liquidity on my 1-hour. I got major downside liquidity for my daily, major downside liquidity on my 4-hour. Okay, and I got some upside liquidity on my daily as well. Okay, now the key to this is understanding that liquidity is always being hunted. Okay, liquidity is always being hunted. So when it comes time to me to execute or to place a trade, my liquidity levels always become my targets. Okay, I'm always targeting my liquidity levels. So when I start to build out a trade plan, or I'm managing my risk, or I'm determining my risk to reward ratio, it's only because what? I can identify where my target is. Okay, I can identify where my target is. And if I know what I'm targeting, I now can develop what? A proper trading plan that gives me proper risk to reward ratio. Okay. If the market was, let's just say we were targeting this upside liquidity here. Okay. But for the sake of an example, let's just say my stop had to be down here. okay? Well, if my stop had to be down here and my target was this liquidity level here, is that going to give me a positive risk to reward ratio? From the looks of it, probably a 1-to-1 risk to reward ratio at best, okay? This would put me in a position where I'm not willing to take the trade, right? Because my risk versus reward, right, is not lopsided, or it's not in my favor. It's not heavily weighted, okay? It's not heavily weighted. So again, the name of the game is identifying where the liquidity resides, okay? And guess what? The market is likely to move where the lower time frame liquidity is present first, okay? It's likely to move where the lower time frame liquidity is present first. So for example, what do I mean by that? We're trading at 1800 right now, okay? It's highly probable, right, that the market is going to come and target this downside liquidity because it comes from a smaller time frame, the 1 hour time frame, before it turns around and attacks this upside liquidity that comes from our daily time frame, okay? I'm gonna repeat that again. I'm gonna draw it over again. Because this liquidity comes from a smaller time frame, it's likely that the market is going to come and attack that liquidity first, okay? If the true move is ultimately higher, okay? Again, I want to thank you all for tuning in tonight. Make sure you go and watch this video over and over and over again. Those of you who are part of the 722 community, you will be seeing me repeat this concept time and time again, day in and day out. This is absolutely the most important thing that you can understand, right? As far as it pertains to building a trade plan and building out proper risk to reward ratio, okay? Again, go back and watch this video as many times as possible. Watch it over and over and over again until you really understand and master how to identify liquidity, identify where the small and the retail traders are currently winning in the market, okay? Because ultimately these become your targets in the market. You understand? Make sure you all follow us on Twitter at 722p, my Twitter page at Chris Cole I am, my Instagram at Dr. Chris Cole I am. I appreciate you all. And until next class, be the hunter and not the hunted. Peace.
All right, bro. Thank you for tonight. Peace, 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 everybody. I hope you guys have a great Sunday evening. Reset your week. Prepare for the week. We mark the levels for a goal. If you trade S&P, go ahead and mark your levels tonight as well. Make sure that you go back and listen to these teachings over and over again to make sure that you are grasping all the concepts. Have a